What's going on, everyone? We're looking at the S&P 500 futures. This is a 2000 tick chart, and today is March 10th, 2023. I'm going to be doing an entire bar-by-bar analysis and chart lesson going through the start of the day all the way to the end of the day, showing you what setups I look for and how to spot them yourself. Whether you're a beginner trader, intermediate, or advanced, this is going to be some great educational content, and I'm going to be basically giving you guys insight into my price action techniques and how to use them with minimal indicators besides this 21-day EMA. So the day started off with a bunch of congestion. So what we do is just draw our trading ranges to identify different support and resistance levels, also known as supply and demand zones. And the way that we trade them is that when we're looking at trading at the top of the range, we're looking to go short. When we're looking to the bottom of the range, we're looking to go long. A lot of people teach breakout patterns and trying to go short at the bottom of the ranges or go long at the top of the ranges. But what you really want to do is fade the breakouts like we see here. So we clearly see that we're bouncing at these levels at the top several times. This is the fifth unique touch at this level. And it's combined with a two-legged pullback. So we have a new low here, we have one leg up, and we have two legs up. So the market works in pairs of twos, whether it's futures, crypto, stocks, forex, whatever it is. Two-legged pullbacks are very, very common trading patterns simply because they're sort of a way to illustrate human psychology. And every time there's one failed attempt, it's not enough to really change the flow of the market. But once there's two failed attempts in a certain direction, that's when traders really pile on and have confirmation that prices are going to head where they're expected to. So like I said, we're at the top of this range. We're expecting to go short, even though we had been trending upwards. There's no real clear trend. It's just a weak uptrend followed by some congestion. So we want to always play the range rules in this scenario. We have a two-legged pullback, nice bearish signal bar. We like to go for a scalp, but you can even get a lot more than that. So now we're reaching the bottom of this trading range. And we also want to focus on our short-term downtrends. So we have a downtrend here. We have a break and a new low. And the rules with downtrends are that once there's a break and a new low, we can expect the downtrend to be over. And the same applies for uptrends. If we're in an uptrend and there's a break and a new high, then the uptrend is essentially over. So I'll explain that as we continue along with this chart lesson, but that is a good starting point. So now that we have a sort of downtrend, we want to always draw our short-term legs. And because we're working down, we want to look for two-legged pullbacks in the short direction. So we have a new low here. We have one leg up, a first entry short. We have another leg up and a second entry short. But this would have been the signal bar in that case, and it's far too bullish to even go short. But it would have worked out for a very, very nice trade. Once again, here we have a new low. We have one leg up and a break of it, and then we have another leg up before having a second entry short. We also have this short-term downtrend in play. We have a wider term downtrend in play. We're not quite at the highs or at the top of the trend channel, but the reason that I didn't like taking this short in real time is because we also must respect this short-term leg up. So like I said, in the rules of any type of trend, once there's a break and a new extreme, then we can expect the trend to be over. So in this case, because there was no clear break and new high of this uptrend, prices could just trap traders going short here and then make a new high and then continue down. So the best thing to do in these cases is just to be patient. Even though prices went and rocketed down without us, it's okay. It's better to be safe than sorry. So now we see that we have several confirmations of the lower side of this trend channel. We have an overshoot, meaning sellers got a little bit too greedy and just basically pushed prices too much. So we expect to at least go back to the top side of the trading range or to even reverse. And I said trading range, I meant trend channel. So we expect to at least go to the top side of the trend channel, which we do. So now we could either keep going up or going down. Because of this overshoot, it kind of made some confusion in the markets. If we zoom out, let's see where we are. We reached a new low of the day. So traders could be thinking that we're in an entire overall trading range for the day. And like I said at the beginning of the video, we look to fade the breakouts of any type of range, even if it's an entire daily chart. We're still looking to use the same price action rules. So even though we're in a short-term downtrend, we really want to be wary of going short because a lot of people are going to be looking to buy and fade this breakout. So now we actually have a two-legged pullback in the long direction. So we have one leg down, we have a first entry long, we have another leg down, and a second entry long. But once again, we must respect this short-term downtrend. We did not get a clear break in a new low, so we have to wait and be patient before we can go long. Even though there's also this short-term uptrend in play, we're expecting to reach a new high because we had a break of it and no new high yet. There's just too many conflicting patterns. It's better to stay patient. That's why we had some congestion before finally reaching that new high. So now at this point, we finally reached that new high. We still have not gotten a new low of this downtrend. So if we get a nice setup to trap the people who are going to go long, honestly, this looks like a very nice short setup to me. If we're counting from this low, because you can always see this as a congestion before a higher low, and that really signals to me that we can count this as a new low. So we have one leg up, two legs up, second entry short. Once again, nice bearish signal bar. We're expecting to reach this low because we never tested it. And let's see what happened. We ended up working downwards for a few points, which worked out for a scalp. And now we got rejected. So prices really could continue trending up, which happens, but there's no real sort of convincing uptrend yet. Here we have a two-legged pullback in the long direction, but let's see if we can fit a wide-term uptrend. That looks pretty nice to me. So honestly, because we already bounced at the EMA several times, this does look like a very nice signal bar, but the risk to reward ratio is not very great, which honestly means that this could be a trap bar, especially because we like to go for scalps. Whenever you see a bar that is almost or even greater than 5-point risk, it's better just to sit on your hands. It would have worked out, but for the reasons mentioned, I would not recommend going long there. And here's another reason why. So here's another similar setup to the one we had here. We had a new high here, we went down, we had a first entry short or first entry long, and then we had a second entry long. Once again, we had a new high here, and we have a first entry long, and we have a second entry long. But notice, this is also a very, very big bar. And even though it looks bullish, it traded all the way down, closed nearly on its high, it's almost like a doji bar. And we also have this short-term downtrend in play. We haven't had a new low of it. Even though it's very, very, very miniature, we haven't had a new low. And also, the reason I don't like drawing these wide-term uptrends is because it kind of gets you in the mindset that prices are just going to go up forever, when in reality, what I really see is we just have another sort of trading range forming. We just had a couple legs up. We had one leg up here. We had another leg up. And now we're just ranging. So if I get a trap-looking bar like this one, I'm going to go short all day. Because the reason this trade works, if we were in an uptrend, you want to be looking for second entry longs, which we have here. We have a new high. We have a first entry long, second entry long. But for the reasons I mentioned, we don't want to be looking for longs, specifically because we had this short-term downtrend in play. We're looking for a new low of it. And also, if we ignored the wide uptrend that I had and only focus on the most recent short-term uptrends, we have this leg up, we have a break and a new high, signaling the uptrend is potentially over. So we're thinking that prices could reverse at any moment. So once we have this leg down, we also are thinking, okay, why haven't prices reached the new low here? So traders might be thinking in the markets, that's a target as well. So when we have a nice bearish signal bar following what was supposed to be a nice long entry, that looks like an excellent, excellent trap. And prices went down. So now we reach the lows of the potential range that we thought might be valid. And what happens? Prices rocket out of there. So now, once again, let's draw our short-term uptrend. We're still expecting a break and a new high of it. So we have a break, no new high, but we do have a failed breakout. Let's see what happens. We continue lower, continue lower, continue lower, and we nearly reach this low. If we zoom out once again, we're just in the bottom half of this trading range. So really, traders in the market are just battling back and forth over what's happening. But once we have even more congestion, it really just looks like a wider term range is in play. So we reach the lows. It's expected that we might have to reach the highs once again, because the rules of trading ranges are that we go from the highs to the lows, back to the highs, until we have a convincing move. And now we're just going sideways, no real great entries. And finally, do we have this new low? We don't, but we end up breaking out and reaching the highs of the range. So now we can look for two-legged pullbacks in the long direction. So let's see if this trade works out. Let's draw our short-term uptrend. We do have a break and a new high. And we also have one leg down, first entry long, another leg down, second entry long. Once again, this bar is absolutely massive, but it's worth taking a risk in my opinion. And it works out. So the reason that I'm saying this is okay to look for long is because if we look at the trading range that we just had, rather than expecting prices to go back into the lower side of the range, what happened is that we had a convincing break out of the top when in reality we should have reversed. Traders had one more strong push up, meaning that even if we forgot about this entire leg up, there's even this short-term leg that we must respect. So we have, after that, we have one leg down, we have a first entry long, and then we have another leg down and a second entry long. So even if we ignore that once again and just see this as a short-term uptrend with a break and a new high, we're expecting to go back to the, at least within the range, and trend downward once again. But if we really focus on the most recent price action, it's really just another mini version of a range. And what range rules must apply is that when we're at the lows of the range, we look to buy, and when we're at the highs of the range, we look to sell. And especially when there's a two-legged pullback, one leg down, two legs down, perfect measure move, that looks like a very, very, very good long. And at overall context, we are expecting to trend higher. We went from the bottom of the range, so we're expecting to reach the top of the range. We're always just thinking on our feet and interpreting what the most recent price action is going to give us, and we're always trying to stay with the most recent bias. So that's even why, if you're just going for a scalp, you might even argue for this trade, because similar to the one we just noted, if we're just playing the rules for this mini range, we have a new low, we have one leg up, we have two legs up, so we have a new low, first entry short, second entry short, it's a failed breakout, we're expecting to go back to the EMA, and that looks like a very, very good trade. And once again, we don't have a great setup, but we broke out of this most recent range, and what happened? We went back to the highs. So now, finally, prices are getting some sort of trend. We have a two-legged pullback once again, but we're below the EMA. We don't want to go long. What happened? We are reaching close to the highs of the day, so we have to be wary of going long, and prices really could reverse at any moment. We're just getting some sort of congestion. We have this downtrend. We have a break of it and a new low, and we're just getting very congested. In real time, this was a very, very hard trade to react to because prices were pretty stacked, and we're not quite touching the EMA. If you took this, bravo to you, because look what happened next. We had an incredible move down. And the reason that this trade worked out is because it's a failed second entry long once again. So if we're counting just from this high, we have one leg down, we have a first entry long, we have another leg down, second entry long. The reason that you don't want to be looking for longs is because, first of all, we're below the EMA. Second of all, we're approaching the highs of the day. So prices could reverse at any moment, but it is hard to know that in real time. So I'll mark this, but it was very hard to predict that prices were going to really rocket down this much. But once this does happen, then we must think, okay, I'm going to look for any potential short setup that appears, because in real time, prices were moving very, very fast, and the downward bias was obviously present. So once we had such a strong move down, and we have a new low, first entry short, second entry short, and then a lower high, confirming the downward bias once again, That's an excellent trade. Once again, we have a break and a new low of the short-term downtrend. So let's draw our congestion. We have a strong leg up. We have a break, attempt at a new high. Let's see if we can get a failed second entry long. No, we don't get one. But what happens is that we just continue pushing down. No real great setups on days where prices are just going incredibly fast and you want to take high probability setups close to the EMA. But let's see if we can mark any great setups. So zooming out, we see that obviously we're just in an incredibly strong downtrend. We can try to draw a wide term trend just to give us an illustration of what's going on, but we really just still want to focus on the most recent price action and the shorter term trends. So it really just looks like we have this downtrend and now we're just having a break and some congestion, but we still want to just look for short setups, even if that comes in the form of a failed breakout. And here an advanced trader can recognize we even have a larger two-legged pullback. We have new low, one leg up, two legs up, bearish signal bar, combined with the fact that this could be a trading range forming, failed breakout, bearish signal bar. You can take that all day. But we do end up having one more leg up. And now we're in an interesting spot again. We do have this leg up, but if we really focus on what's happening, you could try to draw this as a very strong leg. But if you were paying attention, there's no confirmation on the top side of this except this one touch. So if we really were drawing this uptrend in real time, we draw something like this. So we'd want to stay as tight as possible, like this. And then what happens is that we have a break and a new high. So even though we have several bullish bars, it's really just a mini break and a new high. So now we can look for more short setups, especially because the overall context of the day is that we don't want to just be looking for longs. We want to be looking for shorts. We want to be looking for excuses to go short now that the momentum is in our favor. This is a failed second entry long. Once again, we have a new high. First entry long, second entry long. All the people going long are going to get trapped. And that's exactly what happened. So now we actually have another second entry short. This bar is way too big, but it's good to just look at it for educational purposes. So we have a new low. We have one leg up, we went down, we have another leg up, and finished on the low. Prices went down, couldn't quite reach the lows of the day, and prices were just getting very volatile at this time of day. There were really not many incredible setups this late, and prices were just moving very fast, so I'm just going to end the video right there. If you guys have any questions, leave me a comment, subscribe, let me know what you guys think, and have a good one.